Okay, ladies and gentlemen, we are back. Ed, this is our after school session for our new fitness channel, Fitness and Health. Ed is mentioning something about FINMA. Is that like some type of new fitness equipment or is it FITMA instead of FINMA? Ed, is that what you're talking about? A Swiss? What have you posted today?
It's news, Bobby, so don't slay the messenger.
Okay, and what does it have to do with diet and fitness, Ed? That's the first thing I've got to ask you.
Well, if it turns our angst down a little, we won't burn as many calories. But
okay.
Other than that, nothing. Yeah.
Oh, okay. I like that. Okay, good. So it's the new Peloton. I like that, man. Fitness pizza in my mouth. I love it. All right, Ed, what's going on, baby? How's things going?
Good. I'm actually eating a barbecue beef sandwich, actually 2 of them right now. So I'm doing some
good.
calories in.
What in the name of God are y'all doing with the market? I mean, can I not leave for a lesbian and gay pride event and just for an hour or two? And y'all, I mean, what y'all got to botch everything up. What are y'all doing? Let's see what's going on with the market.
Well, on that tack, Bobby, you just need to stay on the air all the time because since you came on, we're up like 35 points. So,
well, I feel like my blood pressure is up 35 points since we've been on together. So that's
you must be taking one for the team because I'm feeling better.
I love it. Look at this. But we got a ceiling. Let's see. Back when I was a trader, this used to be something. I can't even remember what it is now. Oh, Matt, what is this? This is a Theo thing. This is an hourly midband. So what's going on with the Swiss banks, Ed? Tell us what's going on. I'm interested. I really am.
Well, Credit Suisse, which is kind of a distressed bank in Europe, has been getting funding from its Saudi backers, and they said this morning they weren't going to inject any more money. So that stock was down like 30-something%. We're continuing to see carnage in the banking industry, just fear of spillover and contagion from the Silicon Valley thing and what's being done. So this is the Swiss Regulatory Authority. They're going to come out later today and make some kind of comment on how they're going to support Credit Suisse, which is a major financial institution worldwide and in Europe. And just to kind of contain the financial blowout of what's going on right now. Because we don't know what the spillover effect's going to be. This is where the full faith and credit of our paper money system becomes more tangible, because we actually have to think about how much do we trust it. And, people run around all over the place, pulling money here and pulling money from there. I do want to make a comment in the room, like people are saying, oh, I'm going to sell my T-bills. I'm going to do this. I'm going to put the money in my local bank. I'm not faulting that. Everyone should do what they feel comfortable doing. But ultimately, a treasury bill is safer than your bank account, because what backs up your bank account is FDIC coverage up to $250,000, and is what we've seen like lately above that in many, if not most, or all cases. It's the government backing that up ultimately with the Treasury and the Federal Reserve. The T-bill is only going to default if the U.S. government itself defaults, which could technically happen if our Congress can't get together and extend the debt limit, yada, yada, yada. But even if it shuts down like it's done a couple times in the past for a few days, and it does create absurdity, eventually they're going to pass a bill and money will get approved and we'll all get paid back and people get their Social Security and their other federal benefits. So I don't see at this point in time the actual collapse of the U.S. government. A little bit of a tangent there.
Well, that's reassuring, Ed. That makes me feel a hell of a lot better, Ed.
What's that?
That makes me feel a hell of a lot better.
I knew it would.
See the collapse of the federal
probably lulled you to sleep, and you might have gained some weight during that talk. Huh? So, hopefully things can stabilize and this won't get any worse. But it's hard to say because the fragility of the banking system, it's a very fragile setup. There's a lot of faith and credit behind that. So I do think the government did what it had to do. I'm not making a political statement. They had to back up Silicon Valley Bank, or there would have been tens of billions of dollars of uninsured monies that would have literally evaporated. And the economic spillover that would have been horrific. So we're getting waves of panic, like, can the Fed and central banks around the world contain this thing? Probably they can, because what's our choice? The collapse of the banking system, the collapse of the world economies, and the collapse of society as we know it around the world? I kind of doubt that's going to happen. So we just have to get through the intermediate turbulence. I posted this earlier in the Treasury's room. I do not think this is the same as 2008. It looks like 2008 because these bank stocks are just blowing up one after the other, day after day. It's horrible looking. But in 2008, the regulatory authorities had let the financial institutions here, especially here, slice and dice up all these crappy loans that were being originated, like signature loans, no collateral loans, loans to people that couldn't afford it, et cetera. And then they took all those loans, and banks don't hold these on their books. They sell them off and they securitize them into Fannie Mae and Freddie Mac securities. And those are bought and sold by people around the world, financial institutions, wealthy people, et cetera. Those all went bust for the most part. I'm generalizing a little, in the housing collapse of 2008 and 9. And the banks around the world were left holding this crap that wasn't good and wasn't really going to recover. Now, so they had bad assets on their books. Now they have treasury securities on their books, and they're underwater badly on their treasury securities because they bought them all a year or more ago when rates were still very, very, very low. And now they've gone way up. So as I mentioned before, when rates go up, existing bond prices go down. So when rates shot up, the existing bonds in these banks' holdings went down greatly, which squeezes their capital, which makes them less healthy. But their underlying asset is still a treasury security, not a crappy, worthless, collateralized mortgage-backed security.
Ed, can I ask you a question? How in the hell do you not have your own show on CNBC? I mean, you actually sound like someone that knows what they're talking about.
Well, thank you, Bobby. I have my own show right here, right now.
Okay. Well, I mean, really, you actually know what you're talking about.
All 33 of us.
Yeah. Look at us. Well, look at this, y'all. Here's what I thought was interesting. Now, keep in mind, we drew this back on the 1st of the month, right? Today's the 15th. This is a 10-day chart, what you're looking at. We drew this back on the 15th, on the 1st of March. In that time, this is 10 days back. Okay, this is 10 days back, 30-minute chart. We drew the big green monster. What did the big green monster do? It started out at fairly priced. It went into being overbought. Now, you would have thought I drew this today, y'all. I drew this on the 1st. I just need to, now look, y'all, listen. I'm not saying this is witchcraft. I'm not saying whatever this is. I drew this on the 1st, and this predicted the high. I mean, it just did. Then we fall back into the period of where we're fairly priced. It catches a little bit of a bid here, and then follows to the low. Incidentally, where's the low? Well, at the end of our oversold area. Then what does it do? It goes back in to fairly priced, hits the 200-day moving average, or the 200-period moving average, I'm sorry. Then it pops back down, goes back to the 50% line, which we know is a magnet. Then we have a gap down. And what does the gap down do? It finds support where? At our 180% line. And then it pops back up. And where does it look like it's going? It looks like it's going back to the point of control. Now, I don't know as much as Ed did about all that stuff he just talked about, but I sit here and as I look at this, here's why you're experiencing pain. We have gone from the overbought to the top of the overbought to the bottom of the oversold, and I don't see anything that we should not have seen coming. There is not a thing that you and I did not see coming within our chart. If we will only look at the big green monster. And I know there's those out there that'll look on YouTube and they'll say, Bobby drew this today. He picked the top and the low. No, I didn't. Now, can we go down below and go into this area here? Of course we can. But we've got numbers and levels down there too. But it's amazing to look at how different areas of volume profile combined with market profile work together to give us a really good picture of what we've got going on. And as you, what, Beth? Oh, superior on the performance. Good. My little son's band got superior on their support performances. That's excellent. So it's if you look at this, this is a big move, y'all. 4,074 to the 3837. It's a big move, but it is not beyond the stretch of what we saw coming. Ed says Al goes rude. 8C, can you show what are settings for this monkey bar? Is it like 30 days chart for the monkey bars? Yeah, it's the 30-day, it's the clean chart is what I call the monkey bars. And the monkey bars are a daily chart for, what is it, 3 months? Yeah, 3 month, 1 day chart. That's how we draw it. 3 day, 1 month chart. And then this will be good for about 1 month. And then we'll redraw the chart at the end of the time. So even though Ed can come on and can give us, and Ed, you think I'm joking with you. I mean, that was beautiful. And I'm sitting here, honest to God, I'm like, I don't know how Ed doesn't have his own show just talking about macroeconomic stuff. It all made sense to me. Now, do I understand everything Ed's talking about? No, but it sounded good. I mean, the man sounds like he knows what he's talking about. But at the same time, I go, okay, we went from the top of our little chart to the bottom of our chart. Okay, that's going to happen. Now, y'all know that I love Tasty. I love Tom Sosnoff. I just do. I love the man. I think he's brilliant. I like it that he talks to me and chats with me. I do like that. Am I enamored with Tom Sosnoff a little bit? Yes. Am I a yes man for Tom Sosnoff? No, I don't try to be, because y'all have heard me say I don't believe with doing a million different trades. But what I do respect with Tom Sosnoff is that he's put a team together and they do research. Now, what does the research mean? Well, to me, they've come up with some cool jewels every now and then. And the cool jewel that they came up with this time, please tell me I got it somewhere, is they came up with a cool jewel. And here it is. Oh, no. Diversifying during a collapse. So they did a market measure that was yesterday, and they basically talked about diversifying during a collapse. And they came out with some slides. Let's see if I can find it here. That's not it. They want me to view documents, and I don't want to view documents. Let's look at their slides here, because I want you to see this. View slides. Everybody able to see, right? Now, we can easily go back into fitness and health at any other time. So we can do that. But let's see if we can look at it. Okay, here's their slides. They came up with a really good one. And I wanted to show you this time. Since March the 8th, 7 days after I drew the big green monster, SPY has dropped by over 3%. And the VIX has expanded from below its average to over 25, an increase of 35%. Wow, that's a big thing. So it's expanded from below what its average VIX is to over 25. It's an increase of 35%. Now, I need you to know the 8C. The Fibonacci settings, it's all in the big green monster class. We got a whole big green monster class that you can go on to it, or you can search my YouTube channel, should be able to find it. Can someone point HC to the big green monster room? We got a whole little class on setting it up. Yeah, it is freakishly accurate. It's freakishly accurate over a couple of years, y'all. It works exactly the way it hoped. All indicators would work when I started the price action interrupts with every level I've drawn on February 28th. It just does, and I don't know why. I can't explain it, and I ain't smart enough. But I wanted y'all to know, it says for reference, there have only been 22 times since 2005 when the VIX has expanded from below what its average is to over 25 in 3 days or less. We are seeing one of 22 occurrences since 2005. Now, those occurrences are not linear, and there were some years where it never happened. But what this tells us that historically, over an 18-year period, there have been 22 times when this has happened. And I will tell you this, if you are not comfortable with that happening on average greater than one time, a little over one time per year, then our strategy is not for you. But if you can keep your head when all men doubt you, when all about you are losing theirs and blaming it on you, if you can but do that, you can weather these storms. And while I joke about us changing this into a fitness channel, bye, baby. I'll pick her up at 3:30. I'll be out here, and it may be a little minute after 3:30. She can wait a couple minutes.
What's your phone? I'm not looking at it.
Yes, fairy godmother. Yes, yes, honey. Yes, dear. Is he outside right now? Yes, dear. I'll put the dog up. So while I joke and make fun of us, leaving, this is the reason that most people can't do what we do. Because the pain of holding is too great. The pain of holding is too great. But I wish, and is Ryan in here? Ryan, are you in here? I wish Ryan was in here. Let me see if I see Ryan in here. He may not be listening. He's on vacation. Yeah, Ryan's on vacation. Trey's in here though. But Ryan this morning, what the crap is that? Beepy, beepy, beepy. Did the market crash? What was that? Ryan this morning had a tremendous breakthrough. And for the 4 people that are going through the mentorship, which by the way has been reduced to $199. But I'm joking, I kid. They have they're experiencing discomfort, but he had a breakthrough this morning. And what the breakthrough looked like was this. Let's see if I can show you. Well, I want to show you first of all in the Tasty Works account. It's easy to see in Tasty that we have $11,800 in extrinsic value. What he found today was this, was that his loss for the day, his P&L, why is my little thing not working? Why are you not working, you little doo-doo head? Hold on. Huey on tablet. Let me get my, hold on, y'all. What he noticed was that his, make sure this thing's woke up and working. Hold on. Huey on tablet. Where's my tablet? My Huey on tablet that I paid like $100 for, as like it's supposed to be an extension of my pencil and paper. Why is it not working? Working area. Here we go. Working area is there. Okay, so let's see if it's working now. All right. So what he did is he figured out that the amount of his paper loss today, his unrealized loss, was pretty much equal to his increase. Let me make this smaller. To his increase in extrinsic value. All right, let me make that, let me bring that forward to you again. His unrealized loss was equal to the increase in his extrinsic value from yesterday to today. So I forget what our extrinsic value is, but this thing today says, let's just take it for instance, that our loss on the day in this account, well, it said 1,800, now it's 1,700, and then it's 2,000, who knows? It's 1,800. I would bet that our extrinsic value was less by about 2,000 yesterday. So why did extrinsic value increase? Well, it certainly has something to do with the increase in VIX and volatility, and it has to do with the market being down on the day, so that our puts that we sold for, let's say, $1 may now be worth $3. So remember, when we always relate things to food. If you're selling an option that's the size of an apple, you hope to buy back the apple core at expiration. But sometimes on that path from the apple going down to an apple core, it becomes a grapefruit. And that happens as price moves closer to it, it blows up, it swells up, and your apple becomes a grapefruit. Sometimes, if volatility keeps on, your option goes from being an apple to a pumpkin. So maybe here you sold this for $1, you got to buy it back. Now it's at $3. Now, crap, this thing's at $6, right? It's at $6 now. But here's what you need to know. At expiration, if I were to hold all of my options to expiration, this extrinsic value would be equal to what? 0. All extrinsic value goes to 0. And the option is either valued at 0, or if an option, why does that keep getting big? If you sold an option at $1 and it's in the money, you sold the 100 strike and the market goes down to 90, there are what? $10 of intrinsic value in those options. So it's not that we don't have to buy it back for 0. The extrinsic value goes to 0, but it very well may have intrinsic value if the option is in the money. That's what we hope to avoid. How do we avoid our option getting intrinsic value? Bueller. How do we, folks?
Keep it out of the money.
Yeah, exactly. We roll it out further out of the money so that it has 0 extrinsic value, and all value is extrinsic, or all value goes out of it at expiration so that it's 0. That's the game that we play. Now, what you've got to do is you've got to stomach the volatility that comes with this happening. And that is sometimes difficult. That's why I've said time and time and time again that you and I can go to the Wall Street Journal, post my 4-page plan on an inside cover of the Wall Street Journal on 2 full pages, and nobody has the stomach to do it. Nobody has the stomach to do it. Nick says, if in the money, will you wait until most extrinsic value is out? So my plan, Nick, is to roll when it's close to or at touching my strike. That's when I roll. Ryan's plan says that he rolls when the delta becomes 30 delta. Or your plan could say that you have the obligation to roll at X occurrence, or that you have the permission to roll, or permission. Is it a rule or permission? If you don't know what's in your plan, if it's a rule or permission, you need to open your plan up and figure it out. And that may change as you go through these instances of this pain and sorrow. Now, I joked today that we're going to a fitness channel. That was all just having fun. I used to work in radio. That's what I do. I'd have fun on the radio show. I got in trouble with management so many times. Can you imagine the day that I insinuated that my co-host died because he called in sick? his sister called in and said, "Oh my God, my brother's dead and I don't even know it." Can you imagine that how much trouble I got in? I had to come back the next day and record an apology. Ladies and gentlemen, my name is Bobby Gaines. I apologize for my insensitive remarks referring or inferring that Jimmy Talbert passed away yesterday. Jimmy is in fact alive and doing well. My behavior was, you know, imagine how many times I had to apologize on the radio all the time. I was getting in trouble for stuff. But I say that to say this, this is good. This is good. This is why we can sell options. This is why everybody can't do what you and I do. This is the most beautiful of all things. You and I should celebrate the fact that people can't hold through the pain. This is when our plan works. And what Ryan came to the conclusion on, it was so good to see it. Let me see if I can show an account that may show it here. Let's see if I don't have margin calls and they blow me all up yet. Let's see what happens. Let's go. Let me move you out of the way. Let's go over here. Let's bring up the let's bring up this account. All right, so let's go to the Analyze tab. And remember, I think that you and I can figure out a way to show the extrinsic value. Now, you may disagree, or you know, if someone's more familiar with Thinkorswim than I am, you may sit there and go, "No, Bobby, that's not in case if that's the case." But I said, put 4 expirations here. Go here to where the at the money is, right? And then figure out what this box says. Let me draw something around that box. Let me draw me a little box around here. Yeah, I want you to look in that box. Now, when I'm here at 4 expirations, now, first of all, let's look at today. It says that my account is down $889 or so today, right? On the day. I'm down $889 on the day. If by some chance I don't flip out and change this to a fitness and health channel, if I can but hold for 3 days, we'll only be down $193. If by some grace of God, I could hold on for what, 16 days or so, 17 days, if I can somehow hold until April the 1st, as you look in that box on the left, we're going to be up $2,300. If by some stretch of the imagination, I can hold on till April the 5th, I'm going to be up $4,616. If I can hold on and by some means make it for a little less than a month from today, I'm going to be up $5,936. That is the collection of my extrinsic value over time. Now, you say, "My God, Bobby, the market was already down 3%. We're down another 1 or 2% over the next couple of days. What are we, down 5%? And you're saying that you still got extrinsic value of $6,009? Yeah. And I'm also telling you something else. Y'all remember that $6,000? Everybody remembering that? Let's say the market goes down 2.5% from here. I said, let's consider if the market goes down 2.5% from here. Now it says that my P&L on the day would be up $1,265. If I could hold to the 18th, I'm up $1,500. If I can somehow eke out 15, 16 days, I might make it up to $2,600. And then in 4 more days, y'all, I get another, what, $1,300 for $3,900. And if God himself can prolong his return to the earth to collect all of his children and bring us home, I'm going to be up $6,352. Even more than I would if we stayed where we are now. This hit Ryan in a very, very, very profound way. And he says, oh my gosh, Bobby, I want the market to go down. I said, shh. You actually do. You just want it to be orderly. You want it to be orderly. You want it to go slowly. You want it to go methodically. Indeed, that's what you want it to do. Now, Captain Jones made a remark the other day. He said what most people don't realize is the 1-1-2 strategy is a bearish strategy. Shh. It's not even a bullish strategy. It's a bearish strategy. If you can keep your head when all about you are losing theirs and blaming it on you, if you can keep your head when all men doubt you, if you can but manage your delta and your buying power and allow your time decay to bring extrinsic value into your account, you, my friend, are going to be fine. And mark my words, the market may make us lose money this year. I doubt it. The market may get the best of it. I doubt it. If we will not panic and we will but hold on, you and I are going to be just fine. Matter of fact, I am actually fighting my urge to go into my account and to record my metrics today. I'm fighting the urge. I tell you to do it every day, but there's a part of me that says, don't do it, Bobby. Go to your Analyze tab, see for yourself, change this to P&L day, go to 4 expirations, see for yourself if your extrinsic value is just fine for the coming days. See if it's even better if we go down 2.5% and screw your metrics today. Glenn, at least wait until the day is over. That way you might not be tempted to do something you don't need to do. Yeah, exactly. I hadn't got a phone call from Thinkorswim. Ain't nobody calling me, I don't think, that said, hey, Bobby, you got a margin call. I go to this account. I did see that I'm down, 2,000, 19, 1,700. Okay. Says I'm using 50% of my buying power. Okay. Okay, my deltas are 69. Okay, my status 30, 33. Okay. What's my extrinsic value? 12,000. So you're saying if we can hold right here, Bobby, your extrinsic value is going to be, you're going to bring $12,000 into your account? Yeah. Yeah. If I don't lose my head and do something stupid. So about for the first time ever, you're seeing me leaving in 16 minutes to pick up my daughter, and I ain't gonna trade. I ain't even gonna look at it. I ain't even gonna look at my stuff. I'm just gonna look at my risk graph and go, looks better if we go down from here. Anchors away. Because if I go in, there's a chance that I'm gonna overdo something that I don't need to overdo. There's a chance I'm gonna go in and I'm gonna trade and do something that I don't need to do. So I'm not scared at all. So we're not converting to a fitness channel. We're not doing that, even though I'm still going to post that video. It's a good video if you're trying to lose weight, trying to, think, oh man, I got to avoid Texas toast at Zaxby's. No, you need Zaxby's and you need their fried chicken fingers. You're fine. And it ain't you Gorder, and it ain't you this, and it ain't you metabolism. I could lock you in a dungeon and feed you crackers and water and you'll lose weight. Trust me. Don't blame it on all this other garbage. I was a fat person that used to do that. I'd be out of breath. Oh, my metabolism's out of cut. I can't do nothing. Yeah, you can. So I'm asking you to look at your risk profile of your account. How you feeling? How are you feeling? Now I might be tempted to go over here and go, well, how are we doing today? Okay, you're down $1,700. Okay. I'm up $720. I'm down $1,700. I mean, they don't even know. I'm up, I'm down. It's moving around so long. It's moving so quick. Oh, I'm up 1,700. And now I'm up 700. Now I'm up 720. Now I'm down 1,700. Who knows? Step away. Step away from the car, Mr. Gaines. As I remember the policeman saying to me one day, why? Because I'm inspecting your car. Why? Because every time I was in Birmingham, I got pulled over all the time because I had a certain kind of hubcap that made me look like a drug dealer. I had bought a used car that looked like a drug dealer's car. And I got pulled over all the time because they thought I was some drug dealer. Step out of the car, get away from the car, put your hands on the hood. I can't tell you how many times that happened to me because I look like a drug dealer. Today, I'm looking like a portfolio manager. I just managed my portfolio. I didn't even look at my Greeks. I looked here and I said, hey, wait a minute. My extrinsic value is fine. It gets even better on a 2.5% pullback from here. Do nothing, young Bob. Do nothing. Questions, comments. If you can do this, you're going to be a great success. Don't lose hope. Don't look at your net lick and think you are a failure. You are not. You are a portfolio manager who allows the passage of your greatest asset to bring profits into your portfolio. And that, my friend, is time. Matt says it very well. Yes, if we can survive this, we can survive anything. I said it back in September when my buying power was at what, 96%. Hey, my buying power is at 96%. I'm about to blow up my account. No, it wasn't. I did just fine from September on through the end of the year, on through January, on through February. Oh, woe is me. Our net lick says we're a little bit down on the year. Whang, cry me a river. Now, if we go here, might I have to make some adjustments? If we go down 5%, well, instead of being up 6,000, I'm going to be up 5,500. Okay. Now we might have to make some adjustments. You're down 5,000, 4,000, whatever. We might have to make an adjustment. Don't over adjust. I want you to sit back and I want you to relax. And I want you to laugh with me at this, because the day will come, you will look back on this and go, this is the greatest thing to ever happen in my life. Matter of fact, instead of me charging $199 for the 4-week mentorship, I should probably charge $7,000. I should probably double the price for you to go through it right now. Because the learning experience that you have by holding and persevering through a Volmageddon, and that's all this is. It's not really a big market move. It's a big VIX move. If you can hold through VIX doing what VIX is doing and not go back to 0 DTE, you, my friend, are going to be a rock star. You will approach the market with unabashed enthusiasm, and you will fear no one. You will not fear a Volmageddon impact where volatility does this, because you know that you're going to be tested with this exact move in VIX over one time every year for the rest of your life. And while everybody's all of a sudden saying, tell me about butterflies, let's go back to the 0 DTE. I can't have overnight exposure. You just laugh your hiney off and realize that this is the reason you and I can do what we do. You and I could not sell options were it not for the fact that people are scared shitless. Man, once I realized buying power was my most important metric, it all changed. And once you realize that managing your buying power is one of the ways that you isolate that precious little theta and that extrinsic value to come back into your little account, it all makes sense. And eventually you'll be like Ryan that woke up during his mentorship this morning with his head down and going, man, my account's down. And then we figured out, yeah, but it's only down by the amount of extrinsic value that's still going to come back into your account if you'll just hold. And he goes, oh my goodness. The light bulb moment popped. And he said, wait a minute, Bobby, I want the market to go down. I said, indeed you do, sir. I said, you're trading a bearish strategy. You should mark this video. You should mark today. You should mark March 15th, the Ides of March, the day that Julius Caesar was stabbed to death by Brutus himself, along with some others. The Ides of March have spoken. And though Caesar stands before his people and Brutus has the knife drawn, peril is not coming to you. Peril is coming to your enemies, and you shall stick to them like the bark of a tree, and calamity will befall those who attempt to dethrone you. Hallelujah. And amen. There was a story that said Chat GPT predicted crash today. Yeah, suck it, Chat GPT. It's no crash. We're fine. We are absolutely positive